Good evening, and after the break we are back to markets, and here the markets in India today have closed on a disappointing note as there was no cut in RBI's rates. BSE Sensex ended 45 points down while Nifty ended flat today. Let's talk to our market analyst Mr. Sanjeev Bhasin. Good evening, Mr. Bhasin. First of all, how do you read this rate cut, no rate cut by RBI step? It clearly disappointed markets very much.
Well, you could take it with a pinch of salt because the RBI indicated that they would wait for more data after the disruption of the demonetization, and they are a little cautious on the inflation front. So I would say it's a good pause. The market is definitely disappointed, but even if there was a rate cut, we know that the pass-on effect would not have taken place because already the banks have cut the lending rates in the last month. So I think it's a status quo, and going ahead they will wait for more data. In the short run, the market got disappointed, but quickly recovered because the fundamentals remain strong, and any fall would be an opportunity to buy in the slightly longer term.
And what are the positives and negatives for Indian markets in the coming few weeks? What now cues should they look out for?
Well, firstly, the abundance of liquidity has made the cost of credit fall quite sharply. A, B, even though credit is not picking up, banks are flush with funds and they are on the anvil of lending cycle picking up in a bigger way. 3, the level of demonetization was touted to have played out negatively, but has not been as badly placed as the results have shown. The results have shown a stronger than expected pullback. And fourthly, at a time when no other asset class is generating positive return, equities seem to be the flavor of the day, month and the year. So we think 2017 could be a standout year for India as far as equity goes. On the global front, we know that the election of President Trump has actually instigated a global rally on the back that inward-looking protectionism by the US could fuel a lot of the asset classes, particularly commodities. So sum of parts, it tells us that the global commodity bull market is in place, and India may be a late joiner after this disruption, but definitely the road ahead is very, very bullish going into the second half of 2017.
What about the global markets, American markets especially?
Well, like I said, the hike, the rise in bond yields, the return of the dollar, and thirdly, banks doing extremely well on the back that credit is going to pick up after there's anticipation of a huge stimulus which could be announced. So tax cuts, stimulus announcement, and equities being at new highs is saying that a lot of money is actually chasing US based assets. So the US seems to be the best developed market right now, followed closely by Germany and Japan, and in the Asian context, India seems to be an outperformer on the emerging market. So I think the road ahead is clear that the US market is at above 20,000, and we think another 5% is definitely on the cards during 2017.
Mr. Bhasin, any sectors or stocks that are looking positive to you?
Well, certain stocks which I'd like to recommend are a play on the white goods sector. We think that with summer now very close in the next few months, the white goods sector has seen a paralysis in the side that disruption of the demonetization may have reduced the demand for goods. But it is just a postponement, and we think that will come back with a huge vengeance. So Blue Star and Voltas are two stocks we are very, very bullish in the white goods space, and we are very, very bullish on a stock called Indian Hotels, which has shown very good numbers and which should be a very big beneficiary of the GST being passed, as we think the synchronization of taxes can lift the bottom line very, very strongly. So these are three stocks which we are very, very bullish. On the whole, we would say banks have been a very, very sweet spot given that bond yields are at almost 6-year lows. So any decline further in the banks would be a good opportunity. But we also are bullish on the entire material space, with steel and cement being two of our favorite sectors going into the second half of 2017.
Well, thanks, Mr. Bhasin. That's all we have for you today in this edition of WION Wallet. Stay tuned for WION for more news and updates.